Hi, it's Paul Slack. It's Good News Broadcast. I'm speaking with Elaine Smith. Hi, Elaine. How are you?
Doing great.
Good. You're the Master Tax Advisor at the Tax Institute at H&R Block. Yay. We've done a lot of stories with the Tax Institute because tax is very important here in America, I think probably worldwide. And October, this is unusual, I think, this year, though, is the new April. That sounds interesting to begin with. And we're going to talk about most taxing time in history. In history? What? In history? No, okay. What's up?
Well, it's definitely an interesting time right now for taxpayers. The extension deadline is coming up here just next Friday. If you filed an extension in April, your tax return is due next Friday on October 15th. Also, there's been so much in the news about expiring Bush tax cuts and the alternative minimum tax patch, and just a general need for tax planning in general, all bring taxes top of mind this time of year. So really, October has become the new April.
Okay, so what are some considerations, because we're pretty kind of close to that date right now, but what should people be doing?
Well, if you filed an extension back in April, remember that extension to file was not an extension to pay. So if you owe taxes, bring your checkbook when you file that tax return here next Friday. You may owe some additional penalties or interest if you didn't pay your whole bill in April. But don't rush through the process. You don't want to miss a credit or deduction you might have been eligible for. One credit we saw a lot of people miss was the Making Work Pay credit. This credit was new last year. It was $400 for single people and $800 for married people, and you only had to work a little to get some of the credit. So don't rush, don't miss anything in this effort to try to hit the deadline.
So when you say a little, what does a little mean?
You know, for the credit really starts at $400, and then it can go all the way to zero, depending on if you made too much income or not enough income.
Okay, so if somebody makes, $2,000, okay, and they're not even sort of like on a 1099 kind of situation, what happens to them?
Really they would still file a tax return as, that $2,000 would be their self-employment income. They could take away from that $2,000 any expenses they had. So let's just say they maybe did handiwork around people's homes or their clients' homes. So any tools that they had, they could deduct. Maybe mileage they could deduct. If they attended any seminars, I know a lot of people in that industry are attending those green seminars, they could deduct those expenses, all to take away from that $2,000 of income to reduce their tax liability. And then, depending on the amount of Social Security and Medicare tax they would have paid on that, they're eligible for part of this Making Work Pay credit as well as another way to reduce their tax liability.
Okay, but now are they supposed to file now October? Do they have until April 15th, or do they have to do something right now?
If they didn't file back in April, they would file now in October, and then if they just started at they got that $2,000 in 2010, then they would file here in January, February, March in the spring.
In the normal fashion. Okay. How about this home thing? If you buy a home or homes in general, where does that stand on our situations now?
Yeah, homes are great, and for deductions and credits related to taxes. We had that first-time home buyer credit, the $8,000 home buyer credit, and then there was a $6,500 credit for repeat home buyers. If you purchased a home earlier in this year and were in that binding contract before the end of April and closed before the end of September 30th, you have a home buyer credit coming to you, either $8,000 or $6,500. You don't have to wait until next year when you file your taxes to claim that credit. There's a special provision for that home buyer credit where you can actually amend last year's tax return, the 2009 tax return, and claim the money. So you could get your money if you filed your amendment now, hopefully maybe before the holidays, and not have to wait till March or April.
Okay. Elaine, do you know about not-for-profits?
We can talk some about that.
Yeah, what's going on? Because it seems to be a little confusion in this regard. That you have to file. You don't have to. there used to be some changes. If you didn't have raise up to, I think it was $25,000, you did not have to file. And then it changed, or it didn't change, and you have to get something in right away if you didn't do the file. You tell me.
Yes, you're right. There has been some changes for not-for-profits. They've created this kind of easy way to file necessarily with like a postcard. It's to say, basically, I'm still under the amount of income limits. They've got some thresholds in there, and you just kind of fill out this postcard. It's pretty simple, and mail it in. You're required to do that step. It's like on an easy form, and then you can maintain that nonprofit status and meet your filing requirements instead of doing the whole tax return.
Because when I called them, and just maybe I misunderstood, you still had to you had to have one filing in the last 3 years. Does that seem to make sense?
It does. Some of that has changed, and it might depend how much money that not-for-profit, is carrying, or revenue they have from their operations, as well as non-related income they might get from other things.
Okay. All right. How about let's see. It says up here, 25 million taxpayers may pay more at tax time if legislatures fail to act. On AMT. What's AMT?
Well, AMT is the alternative minimum tax. It's a whole separate tax code, as if the regular tax code wasn't complex enough. It was enacted in the late 60s to make sure some really high income taxpayers didn't claim so many credits and deductions that they paid very little tax. So it was to make sure everybody paid some tax. Well, the problem is that they haven't really adjusted really high income earners, that definition. So now, without a patch, some just middle income wage earners will be subject to this additional tax.
Okay, all right. Tax cut dilemma is something here. Extending tax cuts for the middle class would affect about 98% of Americans. What does that mean?
Well, the Bush tax cuts, when they were enacted back in 2001, impacted nearly 98% of households. And if they're not extended, 98% of Americans will face a tax increase. Those hit the hardest are those with families. The child tax credit will be reduced from $1,000 to $500. The dependent care credit will be reduced from $3,000 to $2,400. And that thing, the marriage penalty we've heard about before, that comes back. And that's when a married filing joint couple actually will pay more tax than if they filed as two individuals.
That doesn't sound like good news, and I'm a reverend.
I always tell people will come to me and ask me, well, should we get married? What will it do to our taxes? It's like, oh, there are so many other problems. Don't worry about your taxes.
Last question. What's good news for you, Elaine?
Good news for me is that this is an exciting time. What's great is that, taxes are complex and they change all the time, but that's what's exciting. Having all of this legislation pending really gives an opportunity for us to talk to our clients and do some tax planning so people can get the refund that they want when they file their taxes, and it's not a surprise.
And you guys are everywhere, and that makes it easy for people to feel community and feel local and work with somebody right next.
Yes, definitely.
Thanks for sharing.
Yes. Thank you.
Appreciate it. Take care. Bye-bye.
You too. Bye.